Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to discuss the RBI notifications and the RBI press releases, the important ones that have been released in the May 2024, as well as I have brought some additional RBI notifications and the RBI press releases, that is very small notifications or press releases, but direct question can come in the examination from these notifications and press releases also. So they are also important from your examination point of view, and in this revision session we will do all the important notifications from the exam point of view. Okay, and this is for your RBI Grade B 2024 examination that is soon going to be there. So I hope you are preparing very well for the examination, and these revision sessions are going to help you to see that how much you remember from the previous sessions or from the previous news articles that we have discussed, as well as where you are lagging, what mistakes you are doing in attempting the MCQs. Okay, so today we are also focusing on the discussion on some of the topics that are very small topics, but they are important from your exam point of view. Okay, so good morning everyone, good morning and welcome to the session. Before moving forward, do subscribe to the YouTube channel of EduTap and join our Telegram channel, because in the Telegram channel of EduTap, you will get the PDF of the session. So you will get the PDF of the session in the Telegram channel of EduTap, and the link for the Telegram channel is provided in the description box below. So let's start with the first question. I hope you will be easily able to answer this question. This is regarding the margin for derivatives. Margin for derivatives. So recently in May, there was the guidelines that was released by the Reserve Bank of India that if there is a derivative transaction that is happening between the resident of India as well as non-resident, then there is the margin that is required. Then there is the margin that has to be posted and collected in India or outside. This shall not. Now, margin posted and collected in India shall not be in the form of which of the following, that you have to tell me. So here I am getting the answer D. Okay, so here in the option D, there are two mistakes actually. So anyone can tell me that what are the two mistakes? Okay, the first one is regarding the rating, that the rating is incorrect. But what is the second mistake? What is the second mistake? The first mistake is the rating. Rating is wrong. So the margin posted and collected in India shall not be in the form of which of the following. So D is the answer here. But the margin posted and collected in India by the authorized dealers category 1 and the category 3, that is the standalone primary dealers, they can collect or post the margin in the form of Indian currency, freely convertible foreign currency, certificate of deposit, commercial papers which are having assigned a minimum credit rating of A1 issued by a rating agency, credit rating agency registered with the SEBI, registered with the Securities and Exchange Board of India. So remember that it is the SEBI, it is the Securities and Exchange Board of India, under which the CRAs come, under which the rating agencies come, not under the RBI. Okay, so here this was also wrong. Rupee bonds issued by persons resident in India which are listed on a recognized stock exchange in India and assigned a credit rating of AAA, this is also correct. So that means the margin, first of all, margin is for the derivative contracts that is happening in between the resident Indian as well as the non-residents. Okay, margin means that is the collateral that the parties of a derivative contract post or collect, provide or collect simply. Okay, so now here, authorized dealers, they can post and collect the margin in India or outside India on their own behalf or on the behalf of their customers. Okay, so all of this we have discussed in a previous session. I hope you already know about it. The margin posted and collected in India shall be in the form of Indian currency, freely convertible foreign currency, debt securities issued by the Indian central government and state governments, certificate of deposits, commercial papers that is having the minimum credit rating of A1, and that is with the credit rating agency that is registered with the SEBI. Okay, next is that the rupee bonds issued by the persons resident in India that is listed on a recognized stock exchange and assigned a credit rating of AA. Okay, so now this is the first question. This was the first question. Now coming to the second question, try to answer this question. Let's see how many of you are able to answer this question. So here, the margin can be posted and collected outside India. It can be in the form of, so it can be the margin posted and collected in India, margin posted and collected outside India can be in the form of margin can be in the form of freely convertible foreign currency. That is absolutely correct. Debt securities issued by foreign sovereigns with a credit rating of AA minus and above issued by S&P Global Ratings, as well as AA3 and above issued by Moody's Investor Service. If different ratings are accorded by the 2 or more credit rating agencies, then the highest rating shall be reckoned. Is it correct? So only the third statement is wrong, because if 2 or more credit ratings are given to an entity or to a security, that is the foreign sovereign security, debt securities, 2 or more rating is given, then the lowest of the rating should be reckoned, should be considered. Okay, so this is the news article. This is the idea. The first and second ones are correct and the third one is wrong. So I hope it is clear. Okay, so now this is the basic idea that margin can be posted in the outside India. The margin posted and collected outside India can be in the form of freely convertible foreign currency or debt securities issued by the foreign sovereigns with a credit rating of AA minus or AA3 as per the different organizations. Now the debt securities can have the 2 or more credit rating from the different agencies, and the lowest rating shall be reckoned. Okay. Now for the NCCD, that is for the non-centrally cleared derivative, for these derivatives, there is the foreign jurisdiction norms that can be followed for the posting and collecting of the margin. So this we have already discussed. If you want to see, you can see the complete session on the margin for derivative contracts, because this is a complicated notification. So if you want to get the whole idea of the margin for the margin for the derivative contracts, you can see the complete session. Now, authorized dealer category 1 bank shall maintain a separate account in the name of person resident outside India for the purpose of posting and collecting cash margin in India and the transactions incidental thereto. And for this, a separate notification was also released in May 6, 2024. That is, an authorized dealer in India may allow a person resident outside India to open, hold and maintain an interest-bearing account in Indian rupees and or foreign currency for the purpose of posting and collecting margin in India. So, in the margin for derivative contracts, this was written that there can be a separate account that can be opened for the persons resident outside India for the posting and collecting of the cash margin in India. And for this, a separate notification was also released that yes, this is possible and this can happen. For that, we are permitting. Okay, so the permission was given through a separate notification. Now, we have also discussed that there was a meeting that happened with the major stakeholders in the UPI ecosystem, and major discussion happened on the strategies for scaling up the UPI infrastructure to further boost the UPI infrastructure and expanding the products portfolio. We have the Bharat Bill Payment System, we have the UPI, we have the UPI Lite, we have different products under the UPI system or that are related with the UPI system, that are somehow connected with the UPI system. So the products portfolio has to be enhanced, has to be expanded further. So this is the basic idea. Challenges being encountered by the ecosystem: frauds, if some frauds are happening or if some money is being taken out without consent. So challenges have to be encountered by the challenges that are being encountered by the ecosystem, that has to be faced, and innovative solutions for addressing the same has to be brought. Okay, innovative ideas to integrate potential users into the digital payment ecosystem so that the digital payment ecosystem can further increase. So this happened in May 2024. You can use these points that okay, the RBI is further, or the stakeholders of the UPI system are further thinking of improving the UPI system. Now coming to the next question, try to answer this question. It is informed by the Reserve Bank of India through a press release that the Fincare Small Finance Bank Limited has been excluded from the second schedule to the RBI Act of 1934 with effect from April 1, 2024, as the bank has stopped to carry on banking business with effect from April 1, 2024, as the Fincare Small Finance Bank Limited has merged with which of the following small finance bank? So this is the banking news. This is the finance current affairs. This has come in the RBI notification. So for sure, this is very important. The Fincare Small Finance Bank has merged into the AU Small Finance Bank. So now the AU Small Finance Bank has the branches of the Fincare Small Finance Banks that have amalgamated into the AU Small Finance Bank. So all the Fincare branches will now have the name of AU Small Finance Bank. That is the major news. Okay, that is the overall news. Now coming to the next question, it has been decided that from July 1, 2024, value of foreign currency notes sold by FFMCs, non-bank authorized dealers category 2 to the public for permitted purposes should not be less than dash percentage of the value of foreign currency notes purchased from other FFMCs and authorized dealers. So there is the authorized dealer category 1, there is authorized dealer category 2, there is authorized dealer category 3, then there are the full-fledged money changers. Full-fledged money changers. Okay, full-fledged money changers, they have limited, like authorized dealers or full-fledged money changers, what do? They change your money. Like, do they change the torn out money with a crisp note? No, they change your rupees into the foreign currency, Now for the FFMCs, they are in the lowest of the tier that you can see. So full-fledged money changers, they have the limited reasons for changing the rupees into the foreign currency, that is particularly for your tourism, for your traveling. If you are going outside for your business travels, or if you are going outside for any kind of tourism or traveling, so they provide you the foreign currency against your rupees, or they provide you rupees against your foreign currency. So this is the basic idea. So full-fledged money changers are at the lowest of the tier. Authorized dealer category 1 is the highest of the tier. They are usually the banks, scheduled commercial banks and such, that have the full authority to do the conversion of rupees into foreign currency and foreign currency into rupees for all the current and capital account transactions that are permissible. Okay. So this is the categorization. Now the basic news article is that the full-fledged money changers and the non-bank authorized dealer category 2, non-bank authorized dealer category 2, there is a norm that has been brought that we are going to study. So here I am getting the answer B, that is 75%. So this shows that you are putting your own efforts. That is good to see. Okay. So here what has been said, that in regard, it has been decided that from July 1, 2024, the value of foreign currency notes that is sold by FFMCs and the non-bank authorized dealer category 2 to the public for permitted purposes. There are permitted purposes for which the rupees can be converted into foreign currency or foreign currency can be converted into rupees, should not be less than 75% of the value of foreign currency notes that has been purchased from other FFMCs or authorized dealer category or any of the authorized dealer in the categories on a quarterly basis. So basically the idea is that if the FFMCs or if the non-bank authorized dealer category 2, they are purchasing the foreign currency, if they are purchasing the foreign currency notes from other FFMCs or from other authorized dealers, that can be in whatever category. So the FFMCs or the non-bank authorized dealer, authorized category 2, if they are buying the foreign currency from the other categories, from the other FFMCs, then they have to use at least 75% of their, like they have to use 75% of the foreign currency that they have taken for the public. Okay. So this is the basic idea, that the value of foreign currency notes that is sold by FFMCs or non-bank authorized dealer category 2 to the public for permitted purposes should not be less than 75%. So if they have taken, if they have bought $100, let's say, if they have bought $100 from the other for full-fledged money changers or authorized dealer, then at least $75 have to be provided to the, public. Because why are you taking the money from the other authorized dealers or the full-fledged money changers if you are not providing it further? Okay. So the value of foreign currency notes, sold by the FFMCs or non-bank authorized dealer category 2 to the public for the permitted purposes should not be less than 75% of the value of the foreign currency notes that have been purchased by these full-fledged money changers or by the non-bank authorized dealer. That has been said, and this will be seen on a quarterly basis. So this is the whole news article. I hope this is clear to the people that didn't know about this. Now coming to the next news article. So the existing guidelines permit dash to use only interest rate futures for the purpose of proprietary hedging. Okay. In order to expand the avenues available to them, hedging interest rate risk in their balance sheet and the commercial operation more effectively, they have been permitted they have been permitted to deal in the permissible rupee interest derivative products also. So before, this category of the banks were only allowed to undertake the futures, the interest rate futures. But now it has been said that they can get involved in the other derivatives also for hedging their risk, or for reducing their risk when it comes to proprietary hedging. Okay. So here, yes, it is for the small finance banks. It is for the small finance bank. So proprietary trading, first of all, refers to the practice where financial institutions are trading for themselves. Okay, where the financial institutions such as banks or hedge funds use their own capital to engage in trading activities to generate profits for themselves. That means they are doing the trading for themselves and not for their clients. So in this case, for the hedging, that is for reducing your risk, it was allowed that the interest rate futures can be taken. Okay, these derivative contracts can be taken for reducing your risk, but now it has been allowed that all the permissible derivative contracts, all the permissible rupee interest rate derivative products can be purchased by the small finance bank. Okay, so before only interest rate futures were allowed, now all the permissible rupee interest derivative products have been allowed. Okay, so next one is, so this is the basic idea, that existing guidelines permit SFBs to use only interest rate futures, but now their expansion of the products is happening and now they can use the other permissible rupee interest rate derivative products also. Now try to answer this question. Let's see how many of you are able to answer this question. So the UPI Lite facility currently allows a customer to load his UPI Lite wallet up to what amount and make payments up to what amount? So Sarish has given the answer. What about the others? I'm getting the answer B, that is rupees 2,500. That is absolutely correct. That is absolutely correct. So B is the answer here. Now why we are discussing this? Because in June 2024, in the Statement on Developmental and Regulatory Policy document, there was a mention of the UPI Lite wallet that we are going to discuss. But before that, we have discussed the bulk deposits. For that, final guidelines have been released. For the scheduled commercial bank, the bulk deposits are the single rupee term deposits that are having how much crores? 3 crores. Yes, 3 crores or more than 3 crores. Okay, that is the bulk deposit for scheduled commercial bank. For small finance bank, the bulk deposit are the single rupee term deposit of 3 crore or more than 3 crore. Okay, so this is the idea. For local area banks, it is 1 crore or more than 1 crore. Okay, so this we have discussed. The digital payment intelligence platform, we have discussed the committee, the name of the committee that is set up for the digital payment intelligence platform. The name of the committee is that is set up for the digital payment intelligence platform. Not the name of the committee, sorry, the name of the chairperson of the committee. The name of the chairperson of the chairman of the committee. So it is AP Hota. Shri AP Hota is the chairman of the committee. Okay. Yes. So this we have discussed. The FEMA guidelines, it has been brought recently. So we will discuss this in the July revision session. Now coming to the next one, that is inclusion of recurring payments for Fastag, NCMC, etc. with auto replenishment facility under the e-mandate framework. So first of all, what has happened that let's say you have to do e-mandate. So usually you are able to do the e-mandate for your Netflix, for your subscription of Zomato, let's say. So for your different subscriptions, you are able to do the e-mandate. That is on the weekly basis, the money will be deducted, or the monthly basis, or on the daily basis. So e-mandates can be done on the time-based manner, that on the daily basis, on the monthly basis, or on the weekly basis. Let's say you want to do SIP, you want to do systemic investment. Okay, so you are doing the SIP on the weekly basis. So that is e-mandate on the weekly basis. The money will be deducted from your account. Now it has been said that for Fastags as well as for the AP, for the NCMC cards also, there should be the e-mandate that should be allowed. Now Fastags and the NCMC cards, like Fastag, it depends on your traveling and it depends on how many toll that you are crossing, that is how the payments are being deducted from the Fastags, right? That if you are going through a toll, you are going from one state to another or from one place to another, then there is a toll operator, so you have to pay there. So Fastags does not have a time-based manner or time-based criteria. So e-mandates are not possible. So it is proposed by the Reserve Bank of India. It is proposed by the Reserve Bank of India to introduce an automatic replenishment facility for Fastags also, for the NCMC cards also. That will depend on or that will be triggered when the balance in the Fastag or NCMC card falls below a threshold amount that is set by the customer. Let's say you have put a threshold amount of rupees 100. As soon as the money is going at 100 or below 100, your Fastag will be replenished with rupees 1000. So these limits you have set, that you are setting the threshold limit or the threshold amount, the minimum amount. That minimum amount is rupees 100, rupees 200, rupees 300, whatever minimum amount is as per you, and you are setting the minimum amount and the auto replenishment value. Let's say auto replenishment or auto fetch value in the Fastag is rupees 1000. You have put that, okay? So that can be, yes, that can be replenished. So if the Fastag value is falling below the threshold amount that you have set, that customer has set, so if it is falling below that, you can it will get auto replenished. You do not have to undertake any of the further process. So this will become very easier, and you do not have to worry about your Fastag payments and such, because it is getting auto replenished from your bank account. So the automatic replenishment will be triggered when the balance in Fastag or the NCMC, that is the card, falls below a threshold amount set by the customer. It will be auto replenished with the amount that you want. Now, usually what happens that when we talk about the current e-mandate framework, it requires a pre-debit notification at least 24 hours. So whenever your money is going to get cut for your Netflix or for your SIP or for any of the e-mandate, okay, so 24 hours before you get a notification that, okay, this is on 31st June, on 31st July, let's say, your amount is going to deduct. So for that, a notification will come on 30 July. But for Fastags or for the NCMC cards, there is no time-based manner. That is why it has been said that we can exempt the e-mandate, or we can exempt this requirement of 24 hours for payments made from customers' account for auto replenishment of the Fastag or NCMC cards and such, because here in the Fastags and NCMC cards, there is no time basis that are being followed. Here we are following the threshold amount basis. So then 24 hours doesn't make sense, because as soon as your amount is going at 100 or below 100, the auto replenishment will happen. So 24 hours timeline doesn't make sense here. Okay, so this is one of the we can say proposal that has been given by the Reserve Bank of India. The next one is introducing auto replenishment of the UPI Lite wallet. So similarly for the Fastags or for the NCMC, and similarly for the UPI Lite also, the same facility has sought to be brought. Okay, the UPI Lite facility currently allows a customer to load his UPI Lite wallet up to 2000 rupees and make payment up to 500 per transaction from the wallet. In order to enable the customers to use the UPI Lite seamlessly without again and again filling your wallet, so there is the requirement of the e-mandate facility or the auto replenishment facility for your UPI wallet also. So for that, it has been said that it is proposed to bring UPI Lite within the ambit of e-mandate framework, and the same idea will be followed, that if the UPI, let's say you have set the limit of the UPI Lite also at rupees 100, that as soon as the money in the UPI Lite wallet is going below 100, the auto replenishment of 2000 rupees should happen. So this is the basic idea, that the threshold limit will be set for auto replenishment facility. There will be if the balance goes below the threshold amount set by the person, then the auto replenishment will happen. So these are the proposals of the RBI, and we have already discussed the Harbinger 2024. So in this way, we have discussed the June Statement on Development Policy document. Okay, the next one is, this is the last one. Okay, this is going to be the last of the May or June month notification that we had to discuss. After that, we will discuss the KLEMS database that many of you were demanding. Okay, we will discuss that, what is this all about. So here there is nothing much written here. Simply, if the investment the investment is including the sponsor contribution, including the big contribution by the sponsor. Okay, so the investment including the sponsor contribution is happening. Okay, if you are doing the investment or if you are doing a big investment, that is the sponsor contribution in the units or any other instrument issued by an investment fund overseas. Okay, so the units or any other instrument if you are investing in and that has been issued by the investment fund overseas, that is, now this investment fund is regulated by some regulator for the financial sector in the host jurisdiction. Let's say you are doing investment in the US investment fund or UK investment fund or German investment fund. Okay, that is regulated by the regulator of that host jurisdiction. Let it be US, UK or Germany. Okay, this shall be treated as OPI. This shall be treated as overseas portfolio investment simply. As well as a person resident in India, being an Indian entity or a resident individual, may make investment including the sponsor contribution in units or any instrument issued by the investment fund or investment vehicle set up in an IFSC will also be considered OPI. Simply, IFSC is what? It is International Financial Service Center. How many IFSC do we have in our country and where the IFSC is set up? Anyone knows about it? Tell me very fast. So, we have how many IFSCs? First of all, we have only one IFSC. We have only one IFSC that is set up where? That is set up where? Where is it set up? Anyone knows about it? So, it is set up in GIFT City, that is Gujarat International Finance Tech City. Okay. So, that is the basic idea. So, we have one IFSC that is established in GIFT City. Yes, very good. That is Gujarat International Finance Tech City. In this IFSC is established. Okay. So, now if you are buying the units or you are buying the or you are doing the investment in the investment fund or investment vehicle of the IFSC that is set up in an IFSC, as you know that IFSC is considered the international jurisdiction when it comes to the financial transactions. So IFSC that is in Gujarat, that is in our country, but it is considered international jurisdiction when it comes to the financial transactions. So if you are doing investment or if you are doing if the person resident in India or entity resident in India, if they are doing the investment in the units or any other instrument of the investment fund or vehicle set up in the IFSC, this will be considered OPI, overseas portfolio investment. Okay. So this is the basic idea. Accordingly, in addition to listed Indian companies and resident individuals, unlisted Indian entities also may make such investment in IFSC. This has been said. Okay. Similarly, here also unlisted. So you can read that accordingly in jurisdictions other than IFSCs, listed Indian companies, resident individuals may make such investment in the OPI. If we are talking about different jurisdictions, if we are talking about IFSCs, then the resident individuals or the resident entities as well as the unlisted Indian companies can also make such investment in the IFSC. So just these two paragraphs you have to read. That's it. I have given you the broad idea. Just read it out and you will get the complete idea. Okay. So these are the two paragraphs that you have to cover from this notification. That is this paragraph and this 2-3 lines. Okay. Now coming to the measuring productivity at the industry level, the India KLEMS database. So first of all, the Reserve Bank of India has placed on its website an update on the measuring productivity at the industry level. This was released in July. Okay, KLEMS is nothing else. K stands for capital, L for labor, E for your energy, M for your material and S for your services. Directly from this name of the KLEMS, the question can come in regards to your full form, we can say. Okay. Now, this comprises the Data Manual 2024 and time series data on productivity for 27 industries covering the period of 1980-81 to 2022-23. The database, which has KLEMS data for an additional year, that is 22-23, is expected to aid the analysis of productivity trends in India. So, this is what the KLEMS is saying. Okay, if we try to open the RBI website, if we have the RBI website here, let me directly show you that what is the data. So if we go to July, press releases, For the July month, I will show you that what data they have given and how much you have to study. Like many of you were worried about this KLEMS data. I will show you that what is relevant and what is not, okay? So you have to go to July, and 8th July this was released. So here is the measuring productivity at the industry level. If you go to this measuring productivity wala page, you will see that there is the whole, like you can see there is the whole document that is given, the report that is given to you, and you can read the background, you can read the coverage of the industries. So background, you can read that, okay, the document describes the procedures, methodologies and approaches used in the construction of India KLEMS database. The database includes GVA, GVO and such, okay. So this part you can read the background. Coverage, okay, coverage is for your agriculture, hunting, forestry, fishing, mining, quarrying, manufacturing, electricity, gas, water supply, construction services. This is it. Now coming further down, if you go to the, if you go to read the whole of the report, the methodology is given. Now if you are not from the economics background, understanding this methodology will become impossible for you. And for even the, you will have to do the whole integration, differentiation in this, which is not required. That's why I was not taking this report up, because I thought that basic idea you will read, like the background. If you want to read the background, you will read that and you will understand that this report, you cannot do the whole of the report. It is like that there is time constraint that you have. You do not have unlimited time to keep on reading on this report. That is very complicated, and it is not complicated that, okay, that you will not be able to understand it. You will be able to understand it, but you will require a lot of days to understand this estimation or the methodology. So it is not like, focus on the easy topics right now, so that if the question comes, you are able to do it directly. DPI, Digital Payment Index, Financial Inclusion Index. Previously the questions have come on the DPI and Financial Inclusion Index. In the previous year there was a question on Antar-Registry platform. So now the question can come on Prava. If you have seen the previous year questions, such kind of questions do not come. So even if I take up this topic, it will consume a lot of your time and it will waste a lot of your time. So I was not taking up this report. Rather than focusing on this report, you can focus on FSR, Financial Stability Report, and Report on Currency and Finance. So basically I will tell you that just focus on the industries and the variables and background. A question can come from the theory part, but is it really feasible for you to read the whole of the report and the methodology just for one question? I don't think it is feasible right now. If you go through and see the methodologies, it will be like incomprehensible, because they are using a lot of economics variables, and not only economics, directly stats and the econometrics variables are being used, okay. So that's why I was not taking up this report, because it was not sensible to take up this report from my end. I didn't want to waste your time. Now if you go back to the report, okay, if you go to the data, now coming to the data is actually in the Excel form. So if you open up this Excel form, I have already gone through the whole report. I have seen that what is important for the students and what is not, okay. So I went through the data also, and the data is in Excel form, okay. And if you open up this Excel, the data is divided as per the industries. So there are so many of the data points that you have, that let me show you. So you can see that how many sheets are there. There is GVA data, there is employment data, there is labor data, there is capital data, there is different savings data and such. The economy data, the manufacturing data. In the economy also there is manufacturing, services and agriculture. All the data is divided, and this much, do you really think that you can learn all this data? And then the students were asking that discuss the data, like what can I discuss with you in this data points? So like if I'm leaving something out, that is especially such kind of things, you like first of all go through it once yourself. You should yourself be able to understand that what you have to do and what you should not be doing. Like this data points you cannot do, or you should be a computer for this, okay. So that's why just have the basic idea of the measuring productivity at the industry level. You have to know about the KLEMS, that is no doubt, but there is nothing to understand here. You just have to cram that what is KLEMS, as well as you have to cram the background. Just know the brief idea of the background, okay, that what is the background of this KLEMS. So background and the coverage of industries and variables, that you can see. That's it. Okay. Other than that, if you want to go through the methodology and such, you can go through it, but it will take a lot of your time. And if one question comes from this also, it will not be like cost benefit analysis will not be there. Okay. Now, I want to show you, before ending this session, I want to show you the website that EduTap has brought for you, that is edutap.co.in, so that you have more idea about the examination, that what examination is asking from you, is demanding from you, so that you have the clarity about the examination. If you want to know anything about the exam, you can know from here, okay? So if you go to the website, you can go through the website, and in this you have the free material. If you go to the edutap.co.in, you have the free material. You can go to the blog section, and in the blog section, if you go to the end of the page, section wise information is provided. So if you want to know about the exam information, yes, if you want to know about the exam information, you can go to the exam information. You can know about different components of the exam. You can know the strategy for the exam. If you want to know about the success stories, you can know about the success stories, that how the toppers have achieved their dream. So everything that is like, if you want to know about a single examination, if you want to know about any particular examination, RBI, NABARD, SEBI, so you can know about it. You just have to go to the particular examination, and the exam information, the strategy, the success story, you can get from there. Okay. Even if you want to know about the courses for the examination, you can know the courses that what EduTap is providing to you for RBI Grade B, let's say. So if you want to know about it, you can go to the courses section, and the courses are available here, that you can see, and what off is going on, what is the quick revision batch, and what we are providing, everything is mentioned here. So this is it from my side for today. I hope that now you will be able to do the preparation in a focused manner. What you have to do, what you have to leave, you have to be very specific about it. You cannot do 100%, target 80%, 90%, then and revise that 80-90%. It's not like that you are targeting 80% or 90% and then you are not revising it. So target whatever your target is, 95%, 98%, that is also fine, but keep on revising, okay? So this is from my side. I hope you enjoyed the session. I tried to compile the May one in the 2 sessions, as well as the June session I have taken. For the July session, the date has been decided and it is around after 20th. Okay. So for now, focus on your schemes revision session that is going on at 7 p.m. Your GA revision sessions are going on. You are also having the revision session for reports and such. And I will the July RBI notification press release session will be after 20th. Okay. So the schedule, I will ask the team to share the schedule with you. So thank you so much everyone. Thank you for attending the session. See, I will not say that leave the KLEMS. If you want to do it, I do not want to be that person that tells you that do not do it, and then a question comes, then you say that ma'am ki wajah se nahi hua. If you want to do it, do. Okay. But I cannot demand all the students to read the whole paper. It will not be sensible also. Okay. So I'm not saying that do it or don't do it. I have told you that what you can do from this also. Like, you are intelligent people and you should be able to decide for yourself now. Okay. So thank you everyone. Thank you very much for attending the session. If you have any query, you can. Okay. If you have any query, you can mail us here. Okay.